Hey guys, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And today we're going to cover all the details from today's market action, all the way from Jerome Powell's speech earlier today or his testimony in front of Congress, all the way through the course of the day. First thing to know is the market had extremely light volume, only about 20 million on the SPY today, which is the S&P tracking ETF. That is amongst the lightest in the last 12 months. So Jerome Powell didn't say anything that really rocked anyone. In general, we saw NVDA do well today. Not a huge move, but up just a little bit. And we also saw other big cap tech doing pretty well as well, and that carries the market up. Russell was struggling today. That's the 2,000 stocks that aren't inclusive of the mega caps there, and that was again under pressure. So let's take a look at what the markets are doing today. What we can see very quickly is the Dow is under a little bit of pressure, down $78 or 78 points on the day. The Nasdaq is up just 16. The S&P is barely eking out a gain, up 1.6% or 1.6 points. Oil is taking a little bit of a hit, down almost 1%. And gold, folks, up ever so slightly. Now, Bitcoin's getting the bigger move today, almost a 2% move on Bitcoin. But remember, Bitcoin's been hammered down, and I do still think it has upside to potentially 60 to 61,000 before it hits major resistance. Looking at the heat map, again, as clear as can be, there's your NVIDIA right there, that big green box. If you look at how many times that's been green over the last 6 months, it's almost every single day. And then here's Microsoft. Microsoft's the one mega cap that's under just a little bit of pressure. Meta is gray right here. Meta, when it's gray, it basically means it's up less than 1%, but up nonetheless. Google, same thing, and Apple, same thing. Apple, you can see right there, up just 0.22%. So mega caps generally positive, NVIDIA leading the charge here, and it kicks the can into tomorrow. More testimony from Jerome Powell, as well as tomorrow afternoon at 1 p.m., I believe, is that 10-year auction. We're going to watch that very, very closely. Don't forget, Thursday, CPI, Friday morning, PPI data, and we also have big earnings on Friday morning from the bank stocks like Citigroup, as well as JP Morgan and Wells Fargo. All right, into the charts we go. Let's take a look at our charts here. S&P 500, again, about as quiet as can be. Look at what we have here, folks. So basically, you can draw a trend line through the lows of the day right here, and I'm just drawing a one freehand, but you can see how the market basically just gyrated up and down off of this level all day long. It almost looks like a ball, right? The ball bounces the biggest over here, and then less and less and less and less, which can denote the possibility of a breakdown at some point. But either way, minuscule amounts of volume today, very light intraday. And again, when I say intraday, I'm generally referring to the 10-minute time frame, and that means each of these candles is 10-minute long. So it basically gives us a good viewpoint of how the intraday action was, which is important to know. You want to see, did you have a big pop? Did you have a big drop earlier in the day? Did you recover? What happened there? Because it gives you insight into the psychology of investors. Are they getting skittish, or are they just chilling? And really right now you'd say they're just chilling. Everything is okay, nothing to see here, folks. All right, couple other charts that I want to go over today. We have to look at Tesla. Impressive move today. So I've been off on this one. I thought it was going to stall out around 250 max. It hit a high of around 265 today, 264. It is a double top. So again, that is something to keep an eye on. Will it pull back? Not sure. We'll watch and see. But you have to respect the little double top right here. And again, it is pulling back off of that just about $3 from that double top high. But really remarkable move, folks. This move from the beginning of this move, by the way, today will be 10 trading days up in a row on Tesla. That's getting into uncharted territory. I mean, there are stocks in the past that have done that, but it's few and far between. And that 10 days, the stock has gained over 40%. That's remarkable, folks. We're not talking about a small cap here, mid cap, or even a large cap. This is a mega cap, not $1 trillion, but it is around $850 billion market cap now, which is nothing to sneeze at, no doubt about it. So in a weird way, you can almost see, like, imagine if this forms a cup and handle pattern, right? So that would still imply a pullback, but a shallow pullback. And again, I'm just speculating here on what could happen, but here's your potential big cup. And then you get your kind of handle pattern here before maybe an additional move up. I don't know if that can happen. We're going to watch and see. The chart will basically tell us. But if we get kind of a relatively normalized pullback like this, you start recognizing that pattern, and that's what my job is, to kind of teach you guys these different pattern formations. And again, cup patterns are usually big drops where you kind of come down a little bit here, and I'll draw that in, and then you start to make kind of like a consolidation pattern. It's basically a bull flag off of the initial swing to the upside, and that's digestion. So it sells off, it rallies back, which is bullish. It basically comes right back to those previous highs, and then a lot of sellers come out of the woodwork because they're back to break even from here before the dip. But notice how it doesn't really dip that much because you still have buyers underneath here that are still interested in buying while you have sellers on the top, and that's what creates consolidation, right? So when you have consolidation on a chart, where a chart just goes sideways, it's basically telling you that buyers are equaling sellers. That's why price doesn't move a whole lot. And that actually, depending on where it's forming, it can be bullish or bearish. And just to get into a little bit more education here, I don't do usually a lot of education in trading the close, but let's do some right now. If you have a big drop here, right, so let's draw this in, let's do a case study. Big drop with consolidation, that's bearish. That's a bear flag. Why? Because again, you're getting buyers because it dipped, but those buyers are still meeting sellers from above, and that's creating that sideways consolidation. Again, generally what happens is the buyers eventually get exhausted and the sellers end up winning, and that it goes down. And then the inverse of that is very simply the up move like here, where you have, again, a big move up, sellers emerge, right? So sellers coming in like that, and then buyers are still interested in buying even after that big move and creating that sideways digestion or bullish consolidation. Eventually the move goes to the upside. But in any case, just something to keep an eye on here on Tesla. We'll see if it pulls back. It should pull back at some point. I mean, again, we're in kind of these weird times in the markets where the moves in markets and in stocks, even mega cap stocks, they don't necessarily behave like normal because we're in this kind of unprecedented period here. The same thing happened in 99, 2007, lots of different scenarios. But either way, it is what it is, and our job is to ultimately trade the price action. So we're going to watch to see if Tesla pulls back here. Next up, NVIDIA, just up a little bit today. I mean, again, a little bit. It's 2.5% on a $3 trillion stock. It's a lot of money, don't get me wrong. But again, it's still stuck within what type of pattern. And listen, this is great because we just went over this before. What type of move is this where it's going like this? What's happening? Big drop. Buyers are coming in and buying the dip, right? So that's what's happening here. But also, sellers are still unloading, and that creates this inside bar bear flag, which again, that can result, or usually, and I say usually because remember, there's nothing perfect, there's no perfect answer in the markets, but in general, you would expect a down move on that still to happen. And notice again, it popped up and it had every intention of maybe getting above this level, and sellers have still emerged. Yeah, it's up on the day, but not up a lot from where it was earlier today. One stock that's making waves today is Baidu. Check this out, guys. This we have in smart money stocks and ETFs. It's a beauty. Up right now, 8.5%. Look at this chart. I mean, I love charts like this because they're relatively easy to understand, right? So you look at this, and let's actually start in a zoomed out format here. Let's go even back further in time, and I'll show you why I like this. So what do we know here? We have basically a big drop and a big move. So it's almost like this pattern, right? It's almost like a cup and handle. And then what's going on here for literally 18 months? It's digesting. You have buyers that are still accumulating, right? So do you guys see how almost everything can be broken down into relatively simple terms? This is why I love technical analysis, is because it's literally not rocket science. It's just taking the basics and looking for that pattern formation. So you have lots of sellers after that pop, and there is lots of sellers, don't get me wrong. But overall, it's a down move, an up move, and sideways digestion. Granted, for a really long time, a lot of people would get bored with this and just dump it after a certain amount of time. But now you've gotten a key pivot opportunity for a bigger move up. Now, if we zoom in on this, check this out, guys. Look at this. So right here, if we look at this chart, we can see that right in here, every time it hits this trend line, it basically kickstarts a rally to the upside. So right here, what happens? Kaboom, right? And in theory, and basically, where do we expect it to go? Well, we can see hit here, boom. Hit here, we went almost to that high. Hit here, kissed here, went up here. So what do we assume? We use classic powers of deduction. We say, okay, well, in theory, we should go up to that line. That'll be the first big resistance. So nice move on Baidu. China stocks getting a bid. I've actually talked about China stocks fairly often. I do think there's risks, obviously. China, Taiwan, obviously, we all know about that, or at least the possibility of that. But also, you look at something like an NVIDIA or an Apple or a Microsoft, or Meta. These stocks are trading at 30 to 40 plus PE ratios. And then you look at something like Baidu, which is basically the Google of China, and it's trading at a forward 8 PE. And at some point, it's so interesting that you have to think about it as a, again, for me, micro amount of the portfolio. It's all about diversification, folks. You have to be analyzing risks of everything. And so for me, it's about saying, okay, well, yes, there's risks in China, no doubt about it. But also, if I do 2% of my portfolio, if the worst case happens, I lose 2% of my portfolio versus maybe 4-6% gain, of that portfolio, essentially 100% upside potentially. Even at 100% upside, it's only a 16 PE stock versus Apple, Meta, etc. at 30, 40 PEs. To me, it still makes a lot of sense. Okay. So in any case, just a little tidbit on that one. Let's go to buy a Bitcoin here. Bitcoin's catching a little bit of a bid. I simplified the chart a little bit. We just basically have this line here through here, which gave us this low, a little bit of a bounce. And then where was former support? Well, it was support right here, right? And then this became resistance. So this area is resistance. So 60 to 61 is resistance, and 52K is your support. So that's basically all you have to worry about. For me, when you hit a low level, generally the odds favor a test of the high level, and then it can reject it and go back down. So I'm in the general favoring that Bitcoin probably has upside to 60, 61,000. Then the big test starts. That's where the big play starts to become interesting. Can it get through 60, 61, or does it get rejected, come back down to 52 and go to 49? And again, I'm not going to pretend like I know. I don't know. No idea. I'm just going to use the support and resistance line. When it gets here, I'm going to assume it gets rejected unless it breaks through. If it breaks through, then now it establishes this level as support because it's now above that support, and it opens the door to further upside, maybe to these highs around 70 to 72. It's all you have to do, folks. Again, this is what verified investing is all about. It's using what all these institutions use and giving it to you guys and teaching it to you guys and giving you guys the keys to be able to do this logical, no emotional analysis that literally people pay. You have analysts in these firms that are making millions of dollars a year by doing this kind of analysis that I'm doing in these game plans and these trading the closes. And the idea is it's time to level that playing field for you guys, right? I mean, I want you guys to be able to say, hey, listen, shut out the emotion, screw social media. We don't need any of that. That's all hype. That's all nonsense. Let's literally go to a chart, which is unbiased, by the way. Charts have no narratives, no BS. It is what it is. And let's just see what the chart is telling us. And that's the goal here. All right, gold today, real quick. Not much going on gold. Basically a small little uptick after the sell-off yesterday. Remember, gold confirmed per the chart, not per me. It broke out, confirmed right here. Retrace. If it retraces here, this becomes a high probability play for another leg up. So that's something we pay attention to. Excuse me. Silver, much the same. Did the same thing. It hasn't retraced yet either, but this would be your first retrace support now that it broke out. So there's your support line. Pulls back. You look for your next leg up. If by chance it comes down here, we have a secondary support to DCA in too, right? Oil, which has been, again, my highest conviction of the commodity sector about where it was going, continues to fall. Notice the three trend lines converging right here. Good area to look for downside. Remember, we are getting towards a little minor support on oil right here. See this sideways chop, right? By the way, what type of pattern is that? Up, sideways chop. Up, sideways chop. It kind of told you it was going to go higher, right? Very simple, just using that over and over again. But ultimately, as we come down, that sideways chop is actually an area where you're going to have support. So you're going to have support right here around 80 to 81. I think maybe a small bounce and then another leg to the downside. So just keep an eye on that based on the chart, based on the macro data. Lastly, natural gas had a small bounce off support yesterday. It was up earlier, and then now it's coming back in. I'm still eyeing this area right down here as good support. I may look to enter a small position on something like UNG. I usually trade the ETFs for the commodities as short-term swing trading opportunities, but I'm going to watch that very, very closely for you guys out there. All right. Wow. Whew. Taking a break here. So listen. When it all comes down to it, the markets are just the markets. It's up to us as investors to make sense of it. When I look at a chart like this, I see a bunch of information that I've learned to translate. All right, when most people look at a chart, they see a bunch of ups and downs, and it makes no sense to them. Just like if I were to give you a book in a foreign language that you don't read, you'd be like, what the heck? But if you learn how to read it, you can actually make sense of it. And it starts to tell you a story of what is likely going to happen. And that's what it's all about. Learn to read charts. All of a sudden, investing isn't foreign, it isn't unknown, it isn't scary. It starts to become numbers, data, and probabilities. And all you have to do is basically decide which direction has the bigger probability, position yourself at the highest probability points, and the rest can be profits. And by the way, doesn't mean we profit every time. I certainly don't. I have my fair share of losses, but that's what probabilities tell you. It just tells you you're going to win more than you're going to lose. And that's what the institutions do, folks. That's what it is. So on that note, folks, I bid you the best of good days. I will be back tomorrow bright and early, 9 a.m. for the game plan. You guys take care.